Decode unlocks massive savings for business owners. There is a whole host of regulations, rulings, letters that we can use to our advantage to create massive tax savings.
And welcome back to Decamillionaire Decoded. You know, friends, one of my privileges I have is knowing so many rock star people out in the community who either work with decamillionaires in terms of coaching them, who are a decamillionaire, or who are fastly on their way to becoming decamillionaires. And as you know, our job with this podcast is to decode what it takes to be a decamillionaire. And today is no exception. I am so pumped to have Nick Agarkar on the show. So Nick, man, thanks for joining me today, brother.
Justin, man, thanks for having me. It's good to see you.
Thank you, buddy. We met through a SEPA program that I was a facilitator on. So for those of you who don't recognize SEPA, it stands for the Certified Exit Planning Advisor. So tell us, Nick, what are you doing these days on a day-to-day basis working with helping decamillionaires?
Yeah, thanks, Justin. Yeah, and again, I took that SEPA training course. I am a SEPA certified advisor, so I do help business owners plan and exit their business. But I, about 2.5, 3 years ago now, had this vision to create a system, or really a place, where someone could come for tax, legal, and financial advice. And so I went and I got my Series 65. I'm with a registered investment house, Shorehaven Wealth Partners. I also have my law firm, Crown Point Tax and Wealth Counsel, that sits next to Shorehaven, that effectively helps with the tax planning, asset protection, and then also some of the business owner stuff that we've talked about in the exit planning institute of, making sure that the business is ready to sell. And a lot of the businesses I work with are either closely held family businesses or, smaller, the $5 to $50 million range business. And what I found in working with these folks is that either they're getting very bad advice from folks that aren't just not experienced, or they're kind of shunted to these robo-advisors, self-help sites, and it's just not enough, right? They're kind of in this donut hole of earnings where they're quite wealthy, but they're made to feel as if they're a small fry if they go to one of these bigger shops. So I'm here to fill that gap with sort of a boutique service offering to help those, who are in need, who do have quite substantial assets, but really there's just a dearth of advice out there.
What's interesting and what I love about your story, and I want to unpack your story because it is, to me, powerful. And that is that not only are you currently advising successful business owners on how they could rapidly grow their net worth, you yourself and your family has actually journeyed through this. You yourself had a business. You went through that particular growth and exit. Your family had an amazing breakthrough. They went through a growth and exit. So let's go back to the early days. Before where you're at today, where you're talking about success, where did it begin, Nick? Tell me the story.
Yeah, all credit to my parents. So my parents came here in the early 70s. They're immigrants from India. My dad is educated as a chemist. He has his PhD in pharmacology, and he started working in drug development in the 70s and 80s. And in the 90s, he was on the team that discovered Allegra and was able to get his name on the patent and his, become a name in pharmacological development. Now, obviously a very niche industry, but he that is the truth. And so when our family experienced this, my mother started opening up the bills a little bit more. And, like I think a lot of Americans who start making a little bit of money wonder why they're paying so much in tax. And what can we do to eliminate that burden? Because ultimately, taxes are our single greatest lifetime expense. There's nothing that you will pay more on in your lifetime than taxes. So how do we minimize that burden? And that question was answered by her by going to H&R Block and sitting through the trainings. And I sat with her, right? And we did it together so that, I, from a young age, became very aware that it's not what you make that matters, it's what you keep. And it's really, that's sort of what I tell all of my clients, that it really doesn't matter how much you're making. You see these people online saying they're making all sorts of money. How much are they keeping, right? What do they actually get from doing anything? And really that's the sort of what I was instilled with from a young age was, make sure that your costs are under control, and make sure that you know that your biggest expense is also taken care of by using the code, right? The code is there. It's a manual for wealth creation. You just have to know where to look and how to use it.
I love that statement. I've often said that the Internal Revenue Code, the IRC, as we often say it in shorthand, is the greatest wealth creation tool there is in today's Western culture. It is, in my belief, and I think you just pivoted that. So friends, just as a disclosure here, so Nick is a wealth advisor and an attorney. So I want to make sure we're crystal clear. Today is not giving investment advice or legal advice. We're going to talk a lot about taxes because, as he just said, it's not what you keep. I'm sorry, it's not what you make, it's what you keep. And your tax bill is often the very largest expense that you have. So we're going to talk a lot about taxes today. Please, please, please know this is for educational purposes only. And we have to do that because of the compliance world that Nick now lives in. So Nick, with that being said, tax planning. You've dealt with it from a personal level through the family plans. You've seen how it's impacted our top earners. Plus, you deal with it on a daily basis, consulting successful business owners. So, if we were to start at the meta narrative, the high level of tax, what is it that decamillionaires, how do they think differently than the average American out there, the average business owner with regards to taxes?
Yeah. So I think in two ways. First, it's understanding that the code unlocks massive savings for business owners. There are really, when W-2 earners come to me, I tell them really there's not a lot I can do for you because the code is very stringent on when you get paid, right? You're a W-2. There's not much that you can do. But business owners, there is a whole host of regulations, rulings, letters that we can use to our advantage to create massive tax savings. The one that I come across with a lot of, again, wealthier, well-off businesses is a misunderstanding of retirement accounts. The retirement accounts were created out of the 70s. Inflation and interest were out of control. There was no way, or really it would be a Herculean task for these companies to continue funding their pensions. So they shifted the burden, right, from employers funding pensions to the employee funding their own retirement, right, through IRAs and the 401k plans. The thing is that now when we think about the tax code, we think about it in terms of incentives, right? So how do we incentivize employers to actually offer these plans? Well, the employers, they get an even bigger break. They get to put away even more than the employees into those same retirement plans. This is perfectly legal. So you as a business owner are actually able to save more on taxes and make more money than your employees. So there is a win-win there because obviously the employees benefit from having the plan, but the business owner benefits so much more, right? And then it's also, even when you're getting ready to sell a business, the code allows for, businesses more than 5 years at a certain level, you can really realize almost no tax from that sale of your business. There are so many ways that you can unlock potential. And that's one way that they think about the tax code as basically an opportunity. But then in addition, the second way that I find that they really think about it is, well, how do we make this person a business partner, right? This person's the IRS. Look, if we think about it in terms of equity, right? The IRS takes a bite out of your equity every year. So if they're going to do that, make them work for it, right? How can we do it in a way that then actually creates even more wealth for me? One of that ways is expanding then. Another piece of the code is all about real estate or oil and gas, right? There are all of these sort of investment opportunities within the code that, again, allow you to do some tax-free stuff. A 1031 exchange is another great example I use with people because I get a lot of questions about depreciation, right? Especially around real estate. And depreciation can be quite powerful because it's immediate tax benefits, right? You buy a building, you depreciate it, you get that tax write-off immediately that year. But what I tell people is the government doesn't forget. It's not like you just eliminated that tax burden. You just kicked the can down the road. So now when you depreciate an asset, you've lowered its cost basis, meaning that it's now below what you paid for it, right? So when you go to sell it, you're going to realize a much larger gain than had you not taken the depreciation. So another key that I notice with these individuals is they come with the end in mind. They think about these things in a very intentional way to say, okay, I'm not going to sell this building ever. this building is something that I'm going to pass on to generations. Well, there, sure, take the depreciation and then we can 1031 exchange out of it, right? Until you pass away. And then your kids get the step up in basis and presto changeo. Now I've created generational wealth, right? But if they come to me and say that, well, no, I think maybe 5, 10 years, I might just sell this building. I don't know that I want real estate. We shouldn't be taking that much depreciation because ultimately you're going to end up with this giant capital gains bill that you're not going to like, right? So again, it's coming with sort of this idea that there's opportunities within the code. I can make the government my partner, and that there's a way to sort of diversify out of just my business ownership loopholes and look to other places in the code to find value.
I don't think I've ever heard anybody phrase it as making the IRS your business partner. I think that's a very interesting way of approaching it. And I agree with you in the sense as you laid it out. I've also heard multiple times, various types of tax movements like oil and natural gas, 1031, depreciation, things of that nature. And I think I agree with you on that area. Let me ask you though, oftentimes I've seen where people try to get the cart before the horse, especially business owners. We have a tendency to chase the shiny object. We go to a conference or we listen to a podcast like this and we're just like, oh my goodness, Nick is talking about oil and natural gas. I should be out there investing in oil and natural gas. But were you just speaking from the standpoint of somebody who's already created that wealth and a singularity approach in terms of their business and how they're trying to minimize their present taxes? Or were you speaking in the sense of this is why while they're creating wealth? Because I think there's a major disconnect that sometimes the people who are aspiring to be decamillionaires don't realize that you gain wealth through concentration before diversification. We see that across the board. And I just want to make sure we clear that up. Who specifically are we talking about? Or maybe a better question would be, Nick, is when should I, as a business person, if I'm creating success, is it an income level? Is it a net worth level? When should I begin looking at maybe alternative tax strategies outside of basic bonus depreciation or equipment's pay down or equipment depreciation for me to try to leverage my wealth?
Yeah, I love this question because I get so many folks coming to me and say, well, I saw on Instagram that this is what the billionaires are doing. So how come I'm not? Because you're not a billionaire. So, the things that work for those people at that level of wealth, yeah, like for example, IULs, those whole life insurance policies that are pitched as bank accounts, right? To really make that work, to make the numbers work, you need a giant sum of money. A massive sum of money. To think that you can do it with $250,000 is just silly, right? But again, this is what's out there. And people, like you said, entrepreneurs, they're DIYers, right? We can do it. We can overcome these obstacles. We can figure it out, right? You can't figure this out because of exactly the point that you're highlighting is that it is so fact-based and fact-specific on where you are in that journey that it depends, right? A 1031 exchange might be easy for someone with, even just a couple $100, right? Or a couple $100,000, right? To sort of buy and trade up in real estate. But doing things that involve selling a multi-million-dollar business, well, that's something different, right? And then we need different strategies. So ultimately, my answer to, is there an income level? Is there a point in time that I need to do these things? My question back is, well, what are your goals? Yep. We have to start with the end in mind. We have to start with where are we trying to get to with any of this stuff, right? If it's, I'm just going to work for the next 5 years and then I want to get out, we have a very different strategy than I'm going to leave this to my boy and my boy is 7 years old, right? So there isn't sort of an income level for me. That's just not the way that I work with my clients. There's more attention to where are you? Where do you want to be? And then how can we manage your tax burden so that we can get you there?
I understand now. I think that's clear. And I think you hit a button that I want to stick a pin in. Let's dive into it right now. You hit something that irks me as an advisor to trying to help business owners drastically drive their net worth. And that is, you said a lot nicer than I would. I'd say the lunatic, crazy website or crazy social media advice out there. You mentioned IULs. I could take it and run a plethora of things from Bohemian type LLCs to back in the day. I remember when Squirrel Trust exist. And it's like all these crazy harebrained ideas that I see on the interweb right now, especially Instagram, and business owners, because they're trying to shortcut their way to success, are falling prey to these DIY mistakes. From your viewpoint, because I know you and I could probably get on soapboxes and preach this from the mountaintop. You mentioned IUL, but what's another one or two things that you're seeing out there on it that's just like, dude, seriously, come on?
Oh man, this happened literally the other day, right? These small business owners came up to me at a conference I was at, and they were like, "Oh, well, what we're gonna do is we're gonna get a new car, and he's gonna take that car, and we're gonna do a wrap so that it's a company car, and then we can deduct it." And I looked at them and I said, "A, don't do that, and B, that's not how that works. That's just not how it works, right?" I mean, you can't just suddenly. There's actually a very famous. It's one of my favorite tax court cases from I think the 40s or 50s, where this accountant actually he bought a yacht, and on the yacht he put a pennant, and the pennant said 1040, not even form 1040, just 1040, right? And he tried to claim the entire yacht as a business expense, along with the yacht membership, right? The yacht club membership, because he would get more clients with just having the flag. Now, obviously, the tax court said absolutely not, right? You bought a yacht. Congratulations, pay your taxes, right? So, I mean, these are the kinds of things that we read out there. My sort of call to action for these folks is look into the people. Look into the people that are giving you this advice. I did this once because my wife said, oh, look, look, you know this, right? To get anyone's attention these days, you have to be on social media. So I'm being encouraged to do more social media, even though I hate it. The thing is that my wife showed me one, right? This lady, oh, look, you should look at her and what she does. She's got all these followers. So I look at what she did. Her background was 2 years in marketing at Amazon. And that's it. So she has no financial background, right? She's basically cribbing, just financial advice. I assume that she just gets from the internet. I mean, otherwise I don't know where she would have gotten her training. But she's not licensed to give any sort of advice, but she has millions of followers. And all of these people following her and taking her advice, right? So I think that we all need to approach social media and the things that we see on there with a grain of salt, right? And understand that, yeah, that might sound interesting and perhaps it's technically right with what the code says, but is it right for you, right? I mean, again, it's the same thing of, oh, I'm going to buy a G-Wagon because it's a 2-ton truck and so I can write it off. You are not a construction owner. You don't own a heavy duty machinery business. That's what the 2-ton trucks, that's what they're for, right? That was what the exception was for the people with like a fleet of trucks, not your G-Wagon, right? So, I mean, there's all of these complications and nuances and details with every IRS code, right? That you're just not going to get from a 1-minute video on Instagram.
I guess where my brain is going as you're talking, which I agree 100% what you said. You said a lot more eloquently than I would on my soapbox. But whenever I'm looking at this, I'll go back to what is the root cause? We talk about relentless foundation. That's one of the things that we teach in our coaching program. And I believe everything in life is boiled down to what I call the 5 F's. And it's not my 5 F's. It's out there on the internet, but it's faith. What do we truly believe and why do we believe it? Our family, who are we working for and why? Our friends, the people we socialize with, the fitness, how we care for our mind, our body, our spirit. And then ultimately finances is last. That's the way in which I rate my own life. And as I'm watching these business owners who ultimately aspire to reach this decamillionaire status, there's got to be something different, Nick, between those who actually reach this level that we're trying to talk to, this decamillionaire status, and the average. And I have to believe it's something in their foundation that where they're not getting swayed by the shiny objects or by the young lady you mentioned who perhaps doesn't have any formal training or ever have any experience. What is it, from your opinion, separates those who are in the top 1.011% versus the average business owner that keeps them focused to ultimately achieve that success?
Yeah, I think if I'm using your framework, it's faith and discipline. So
Okay.
the first on faith, I think it's almost paired with kind of gratitude, right? Of I have this day, and to me that's a big part of my own faith, right? Is I'm a Hindu, so it's really understanding that I have this day in this universe, in this body, in this realm, and I should be grateful for that and grateful for all that I have, right? And I think for me that came from my parents, right? Coming from India, they would take us back every year, right? So every year I would go back and I would see India. And I never actually sort of thought about India in any kind of way until I took a buddy of mine from college there with me to travel. Actually, through his experience, where my eyes opened to, holy crap, yeah, you're right. This is really different. This is really, really different from the US, right? From what you experience. And for me, it's normal because that's what I grew up with. Every year, there'd be at least a month or two that we were in India. But the thing is that people really can't conceptualize what it means to have feral dogs wandering around, right? Or growing up in like my father did in a 450 square foot apartment with 14 other people, right? They can't really understand what it means to actually have nothing, right? And so, from that perspective, I think a lot of the families that I work with that are self-made in that way, there is that understanding of, I should not squander this. I have to then, and this ties into the second point, discipline, right? I have to be very disciplined with my money and what I do with it but for the grace of God, right? I mean, otherwise, I could, I have this healthy fear of, this is not forever, right? I need to make this last. I have to preserve it. And that means I have to be disciplined with my own values, right? Maybe I want that Bentley, but it's just not a good idea, right? It's not something that I can do and actually be faithful to my goals and what I want to achieve. And really, that's a really hard thing, right? That's a really difficult thing. But I've found that pretty consistently in those that are extremely wealthy. They have that discipline of being able to say, you know what, that would be nice, but it just doesn't fit with where I'm going. And that takes a lot of strength. And I think that takes a lot of faith in knowing that, you know what, I can lose all of this. This isn't just sort of, I shouldn't just take this for granted. And I should do then my best to be a steward of this money.
Brother, I think that is probably the most powerful thing you've said as of yet, in my opinion, because I love the way you couch gratitude and discipline. My wife and I, after selling our company, we had this heartburn desire to um, help people around the country and around the world. And so we support several different charities. We support a girls' home in the Dominican Republic that brings girls out of the sex traffics and tries to help them rehabilitate. I'm talking about little girls. That makes you want to just choke somebody when you see the evil in our world. And we help, we feed kids in Central America, and my wife's family's from the Philippines. And so just seeing how people are happy, they're gleeful, they're ecstatic in a different culture, and they don't have nearly the stuff that we have. And so one of the things I've noticed when I'm talking with those who are decamillionaire mindset, not necessarily the bank account, the mindset is always in that gratitude and discipline. I love that. But
Yeah.
whenever somebody gains that mindset, it ultimately comes down to execution. They're going to have to say, okay, this is where I'm going and here's where I'm at. But working with the clients that you're working with and the ones you have the privilege to coach and help them continue to on their journey, how do the most successful clients stay humble during this journey? And let me couch it with this. Nick, you and I can see these business owners, they're extremely talented. They're very smart, maybe not book smart in sense of college educated, but they have a certain vim and vigor about them. And you know that they're willing through tenacity to go through their wall to hit that journey. How do they run this race while at the same time staying humble and leading with gratitude and discipline?
Well, I think it comes part and parcel to those things, right? I think if you're grateful, you realize that you didn't do this alone, right? I think that's my biggest takeaway from the folks that I work with is they give credit to their teams, right? To their advisors, to their employees, to other people that help them along the way, and it reminds me of, the Oracle of Delphi calling Socrates the wisest person in Rome. Why? Because he admitted there are things I don't know, right? And that's honestly a big piece of it is the folks that have been the most successful are willing to say, I don't know this. I don't have time to learn it. And I'm not interested enough to learn it, but it is important to me. So I should do something, right? That's kind of for me what it comes down to when you're really trying to grow your wealth and you're trying to maintain it, is really understanding kind of where your gaps are and what you need help with so that you can get to that next level. Again, you have to be coachable, right? I think all of these people are coachable. They're willing to learn and they're willing to listen. because they understand there are things they just simply don't know.
Absolutely. I want to dive into that finance section around execution. We've talked about where they're at mentally. We talked about ultimately where they want to go. And you've seen this even in your parents' life and even through their successes. You yourself have had successes on growing companies and exiting companies and doing things around. And now you have the privilege to serve people. What's perhaps one of the most important financial decisions that somebody needs to make along this journey from where they're at today? And they're like, hey, I want to maintain this status. I want to maintain my lifestyle. Yes, I want to lead with gratitude. Yes, I want to swallow my pride. Yes, I want to continue to stay faithful to the mission I've been given. But what decisions do you see that those who reach decamillionaire status make where those who don't make?
Yeah, I think it's spending on what I call the clouds. So I talk about business and business owners with, is your head in the clouds or is your hands in the dirt? The clouds are, logo, rebranding, marketing, events, right? All of the fun stuff that we as business owners get to do, right? That's fun. But ultimately, that spend, the ROI, the time to realize that ROI is very long. Usually it's decades, right? To actually realize real return. Again, you can talk to people in advertising and they'll disagree with me that no, we can get you clients very fast, right? And maybe that's true under the short run. But if you're going to be spending thousands of dollars, thousands upon thousands of dollars on advertising, there's going to be a time where that money doesn't generate nearly enough to cover its cost. So what do, right? And if that's the way you start your business, it's very hard to recover. So I suggest people actually put more money into their products, their services, their offerings. What value are they bringing? How are they thinking about their actual business and processes? And then when they have the money, reinvest in that, right? Fine tune those processes, fine tune those SOPs, those things that you're telling your employees, the vision, the mission of the company, and make the actual things inside of the business better first, then broadcast that out, right? Because if you have this something that's really good, you're going to get referrals, you're going to get that traction, it will build. And then when the time comes to, again, put your head in the clouds and have some more fun, there's a time for that. But I think everybody wants to go there first instead of actually digging into the dirt and actually getting into it and really developing something that's special for people.
I was just telling our coaching class, we do a bi-monthly coaching class for one of our offers. And we were just talking, twice a month coaching call. And we were just talking and someone asked me, they said, hey, Goodbread, how's the coaching business going? I said, I'm having a blast. And so what was interesting is I said, look, we didn't open up our portal until July of last year. Roughly, it's not even a year as the date of this recording. And they're like, well, what did you do the first 6 months? Well, the first 6 months, we built our systems and our processes and everything internally to make sure our product and our service was paramount where it needed to be. And then we opened it up for new clients from July 1st till present of this recording. We not only did we break even, we're actually on a run rate for 7 figures on a brand new launch of a business. And they just all looked at me, and these are financial advisors. These are business owners who are successful, decades of, they're like, you're already making more in less than a year than we are in our business. I'm like, absolutely. It's because of that dirt metaphor versus the cloud. I love that metaphor there. So whenever though, where I have to see the breakdown that happens is the business owner will say, good, Nick, Justin, man, that sounds great. I know I need to invest more in systems, or as you mentioned, or into services or products or whatever it may be. Where do I start? Whenever, from your standpoint, being a wealth advisor and a tax attorney, from your seat, how would you answer that question that a business owner might ask? Yes, I agree with you. I need to invest in systems, processes, teams, services, products. Where do I start? How would you answer that?
Yeah. So first, a couple of assumptions, right? Let's assume that this person is already in business, right? They're running it. It's a going concern, but things are, maybe not so great. That's where we start, right? Where are the points of failure? Maybe it's, look, you've got the wrong person in this operational seat. They're just not an operational person. This person is a big thinker person. So they need to be in more of a strategy seat than an operations seat. So maybe it's personnel, right? Maybe it's that we need to change those things. Maybe it's, look, this process doesn't work because of simply the way that the money flows through your business, right? This person is getting bottlenecked by another, so this workflow is wrong. So it's maybe addressing that issue. But we have to examine. That's the thing, is that, again, the most successful clients that I have are those with loads of data, lots of information, dashboards, understanding where they are, where they want to go, and how they're going to get there. And so they are able to see kind of, okay, here's where the breakdown is. Here's where I'm getting hung up. So I have a problem now that I can actually identify and fix. It's those that are sort of flying blind that either aren't watching their numbers, don't really have a good grasp on the processes and systems that are already in place, that are lost, right? They don't even know how to find the problem. It's as if you know there's a leak somewhere in your house, but you have no clue where the pipes are, right? So it's, but again, that comes back to foundations. It's how did you build this business, right? Did you build it as, just as fast as you could and you grew really fast and there was no time to do those SOPs, to do those manuals, to get those people on board in a structured way? Or did you build it slowly and maybe you were a one person operation and then all of a sudden it exploded and oops, I just didn't get to it. So it really depends kind of on where we are in the business. But ultimately, the solution is first creating some sort of view into your business for yourself so that you can identify where these leaks are and then you can attack the very specific problem rather than trying to figure out what is even going on.
From your seat as an attorney, wealth advisor, dealing with two disciplines, and honestly, I think it's a brilliant combination because taxes, as we talked about earlier, is the greatest wealth creation tool there is. Whenever we have a business owner who is rapidly growing, they know where they're headed. They're growing their business value. They're now looking into the future and saying, "Oh my goodness, in 4, 5, 6, 7, 10, 20 years or so, I've got to do something because most of my wealth is my business." If they've actually had some sort of valuation done, you see this day in, day out.
Mm-hmm.
Estate
Mm-hmm.
planning around that, and equalization of estate becomes complicated at some points whenever you're dealing with this highly illiquid asset versus a liquid asset like a IRA or a stock account or IUL, Universal Index Life, or something of that nature. Just businesses are such a bugaboo to deal with. So from the position of, okay, I know I'm successful. I have this business. It's providing me income, but in the event of pick something, death, disability, disagreement, divorce, whatever, how should they be thinking about this highly illiquid asset in this journey that while they're creating wealth and not yet ready to exit, not yet ready to transition this asset to another entity? What are one of the things that deca millionaires think like, whereas the average business owner doesn't in those areas?
Yeah. So, I mean, first, it starts with internally within the business. If you have a partnership or if there are other people involved, it's getting those buy-sell agreements in place. It's getting those documents within the internal structure of the business in place to make sure that there's some continuity, right?
And just for education purposes, somebody might not know what a buy-sell agreement. Just quickly explain.
So there's a lot of different ways to fund it, right? But we leave that aside. Effectively, it's an agreement between two owners that say, if you pass away, I'll buy you out, right? Or if I pass away, you'll buy me out, right? So there's a way basically that it doesn't pass to someone else's estate. It stays within the actual business owners, and then the business owners can actually run the business instead of now some, trustee or a beneficiary coming in and trying to figure things out, right? So at any rate, that's sort of first, right, is to make sure that the structures are in place within the business in itself. But then it's, the second order of business is succession planning, right? So it's identifying either those people internally, if it's a family business, the next generation to take over, or maybe there's a really good general manager that we can incentivize to sort of start taking some of your chips off of the table. And that's the key, right? The third phase here is, okay, how do we get some of this equity out of the business? And it's much like getting a house ready to sell, right? We've got to look at the balance sheet. We've got to make things a little prettier, right? For that valuation so that we can then maybe take it to either maybe a private equity firm. Maybe it is an internal sale to some of the employees. It's all the options that you were wonderful enough to lecture on in the CEPA training, right? It's all of the ways that we can sort of structure a business exit so that the business owner can take some chips off the table and move those chips into other assets, right? And again, it comes back to the tax code. We want to be investing in tax efficient structures and ways that we can take the money out of the business and either defer the tax or create an effect of zero tax through things like a 1031 exchange, right? So there are these sort of these phases though, and things that we have to look for as we think about how am I going to diversify?
Nick, you mentioned succession planning and you mentioned pulling equity out of the business. From a tax planning perspective, do you see that the Deca millionaires are extremely proactive years before this decision is made? Or do you see that Deca millionaires are in the moment making decisions? I'm trying to figure out in my mind this differentiation between the average business owner regarding succession planning, specifically getting equity out of the company, and those who are hyper successful, the different thinking and the actions they take. Do you follow my very poorly worded question?
Yeah, I know. No, I think I understand entirely. The issue is that I see this problem manifests itself no matter kind of if you have a lot of money or not. So I've found, some, very successful people bury their head in the sand to this kind of issue, right? They might be maybe hundreds of millions of dollars that they have, but ultimately they don't want to think about their own mortality. They don't want to think about, oh, my son taking over because they built it. And I get that. It's your baby, right? You've spent your entire life, your entire working adult life doing this and building it. It's very scary to think about, well, now someone else has to do it, or I have to give up some sort of control. I've seen that across the board, right? And that's sort of a kind of an arm around the shoulder kind of thing. And I've used a line I think I got from the SEPA program, which is, the folks are sad or they're worried. What if I tell my employees, right, that they're going to jump ship? You're 81 years old. You think your employees aren't already wondering what's going to happen next, right? Yeah. I mean, this isn't a secret. So, I think that there's sort of that piece of it that kind of is coaching. But then it's also the those that are successful. And your question is a bit loaded, because I think the obvious answer is you have to start thinking about this years in advance, right? Because it takes time. If you want to get the most out of your business, it takes time to make that balance sheet look excellent, right? Look like the absolute market industry leader in your space. That takes some time to make sure that we're there. And then second, you want to be able to get that valuation so that you can take pieces out. So you don't have to sell the entire business, right? You can stage this out over time. But again, if you're in a rush or if it's an emergency situation, it's going to be very difficult, right? It's going to be much harder to get that top dollar value. And you're probably just going to be disappointed at the end of the day. So it absolutely behooves everyone to think about succession planning years in advance. And it doesn't benefit anybody, especially those working in your business, to bury your head in the sand and not think about this as a serious and important issue.
I'm glad you answered that way, because I want to bring it to the biggest question I have for you. This is the last question I'm going to ask as we bring this thing to a close, but I think it's the one that I hear grumblings on whenever I'm talking with successful business owners who are on their path to their freedom. We talk about closing the value gap. We talk about closing the wealth gap. We talk about a business owner reaching this pinnacle point in their life where they work for impact or work for fun versus working for requirement or necessity. They've created enough wealth within their company or external to their company, and their business is attractive, and perhaps they're even ready to exit their company. But it comes down to a simple question around taxes. Whenever we launched the Deca Millionaire Decoded, the very first episode that we released, I actually explained that you could have a $10 million valued business. You may end up paying 10%, $1 million of it to a broker, M&A advisor to sell the thing. You may have 5% in miscellaneous expenses in terms of attorney, CPA, some type of provisional type expense that's included in the definitive documents. But then you have Uncle Sam, that business partner that you mentioned earlier. And I said, I've seen businesses that deferred the tax to later on, so they don't realize taxes up front. I've also seen businesses that didn't do any type of planning, and they lost 50% or more of the value of that company through taxes. So if we've got a business owner out there who's trying to reach a $10 million valuation on their business, and we already are on $1 million for broker fees, let's say another $500,000, $1.5 million, we're down to $8.5 million net before Uncle sticks his hand in this thing. How do we keep more money, man, in our pocket when we're trying to build this wealth so we can actually retire and enjoy life?
Yeah, I mean, listen, there are so many ways to do that, right? It's taking advantage of certain provisions in the code that allow for tax deferment or even tax elimination on certain kinds of businesses and the way that we held them, right? So it's looking at sort of the structure of the business and making sure it's sound from a tax and tax planning perspective, because often that's not done up front, right? When we've just first formed the business. But it's also then structuring the sale, right? Often people think, of, I can just get this one-time lump sum and then I'm, on easy street. Usually that's the least tax efficient, right? Structuring it as an installment sale where you're receiving, monies over time is much better. And to me, the tippy top of selling a business would actually be to structure it in sort of almost an exotic way. I will come on as a W-2 employee for a little while, but you're also going to pay me a distribution. There's so much tax benefit there, right? There's so much that we can squeeze out of that, just that structure, to defer some of this tax and compensation for the business. There's a million ways to slice this up. And, I'll end with what I started with, which it really depends on what your goals are. What do you want, right? There are times where maybe the person is like, you know what? I just want my lump sum because I want to be done. I don't care. So what? I walk away with $4 million off my $10 million sale? Fine. That's fine. That's more than enough for me, right? And at that point I say, okay, all right, well, then that's an easy play, right? But other times it's, I want to keep as much of this 10 million in my pocket as possible. And if that's the goal, we got to use different strategies. So again, it comes back to, what are we doing here? And that's dictated really by the client and the business owner.
Nick, man, you've been a wealth of knowledge today. I have 3 pages of notes here. For those of you who are listening to us on Audible, I've been with a pen and paper, absorbing this, writing down notes. I've got a couple of takeaways that I'll release on the next episode that I heard that I want to apply specifically to my businesses. And I'm going to challenge you to do the same. But before we go, Nick, where can people reach you? How can they connect with you? Who might be the best person that you can rock their world? I mean, they get on the phone and you're like, brother, I know I can drastically rock your world and help you in a way that no one else can. Who is that person? How would they reach you?
Yeah, I would say if you're a small business owner or you're an entrepreneur making anywhere between $5 and $50 million a year, I can definitely help you. You can certainly find me on LinkedIn. It's Nick Agarkar. That's easy. My email, nick@crownpointtax.com. Crown has an E at the end because I'm fancy. That's marketing, right? So it's crownpointtax.com. I'm also with Shorehaven Wealth Partners. That's shorehavenwealth.com. But I'm all over the place. I'm pretty easy to find. Well, I'm sure we'll drop links in the show notes as well. But yeah, I'm happy to talk to anyone. And again, I think I said this before we started. I'm on a mission of education. I really think it's criminal that the school system in our country does not teach any of this in terms of taxes, balance sheet, just basic accounting. I think has to be taught. And I think that's a huge miss that for a lot of entrepreneurs, and it's where business really starts and ends.
Nick, thank you so much for joining us on this episode. And we'll certainly put all these links that Nick mentioned, plus a few others, into the show notes. I would challenge you to connect with him, at least on LinkedIn, perhaps on Instagram. Follow his life. He has been a wealth of knowledge today. I'm telling you, friends, we have some dynamic guests, and every guest that we're bringing on the show, they are rock stars. They know their craft. They know how to rock your world. So if you're wanting to reach Decamillionaire status, here is yet another top-notch guest who consults, who drives, who helps motivate business owners to rapidly reach that status. He approaches it from the wealth creation side as a wealth advisor and from the tax planning side as a tax advisor. And I'm telling you, that combination is powerful for you as a business owner. So Nick, man, from the bottom of my team's heart, myself, thanks for joining us today on the show, brother.
Thanks so much for having me.